Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, July 15th, 2008. Well, another crazy volatile day on Wall Street and another failed late-day rally in the markets, as the markets for the third day in a row stage a huge rally, the biggest thus far, only to sell off into the close, closing the market flat to slightly negative. And we're going to look at this, folks, and how important is it that we just cannot hold these late-day gains. We're also going to look at the attempted capitulation days in this market over the last 2 days. And this is a phenomenal thing to check out, because what you're seeing here early in the day for the last few days is panic selling taking over. And then the panic is coming in and the markets are just diving. You saw the S&P futures today down 25 plus points early once Bernanke started his testimony around 10 a.m. Eastern Time. And as soon as that happened, you saw the markets tank as he talked about a weak economy, the risks of inflation, and some other negatives in this U.S. economy right now. Now, what did we see after that? Well, the markets tanked hard, and then all of a sudden caught a bid rallying all the way up to the point where the NASDAQ was trading up 25 points. The Dow was positive, the S&P was positive, and we held these gains till around 3:30. And the 3:30 time frame has been a knock on this market over the last 3 days, and every time the markets rallied, and again, the last 2 days now, today and yesterday, we've seen the markets go positive, and then hold off and drop down to the negative side into the close as the rally just cannot happen. We've talked about capitulation. Now, capitulation is where you have that panic sell-off where basically everyone on the long side just exits, or the majority of the weak hands exit, and that's the bottom of the market. Whenever you get that kind of high-volume sell-off in the markets where everyone just kind of throws everything out the window, that's the point that you're looking for to see that sell-off in the market come to an end and the market start to get a base and a rally started. The markets, on one hand, remain extremely oversold, meaning that there are more shorts out there than almost ever before in this market right now, and that's a dead signal that this market is just waiting to rip to the upside. Yet, having said that, at the same time, you have every attempted rally intraday fail as the financials continue to take a beating, and Fannie Mae and Freddie Mac getting crushed again today, along with some other players out there. So we're going to look at all this, folks, and we're going to look at key levels on the technical side of the market that we have to hold. First off, let's go right into the intraday chart, because this is what it's all about, guys. Look at the intraday moves in this market. I mean, you had some mega moves. Early on in the market was trading lower here, and then started to get a little bit of a bid early in the morning, and we're talking pre-market, and you can see it kind of trending up, and then 9:30 comes, and you see a sell-off, and then you see the sell-off, and this is what we talk about as an attempted capitulation move right here. The size of this down candle at the lows, and look at the volume, biggest volume candle of the day. And that's what you're essentially looking for when you see capitulation. You want to either see a day like that or a period in intraday like that where everyone just throws it out. And it looked like it was capitulation. It looked like this market got a bid because look at the rally that came off this low. Alright, biggest candle of the day right here. Note that. Biggest down candle of the day. And off of that, look at the move you had up. You had a mega move up in this market to this point. That's a big-time move off that volume candle on the downside. And notice this, alright? Again, notice how it came all the way up, and you had waves. Waves of buying, then a little bit of a sell-off right into the moving average point of the 20 moving average on the intraday S&P futures. And then you had another push, and look where it came, right to the 200 moving average intraday. And then another little wave of selling. And then we actually took it out, but again, you had just double-topped, and note the double top here, folks. Alright, note the double top right there. Notice how you never really got above that double top high from this point. You got above intra-candle, but you never really closed above. And then as soon as you got that double top in place, the markets began their 3:30 sell-off and sold right into the close. Look at how many candles you had on the red side. Now, red side candles are down candles. You had 1, 2, 3, 4, 5, 6, 7 straight down candles into the close. So really that's telling us that's about an hour's worth of time there on the sell side ever since this double top, starting right around 3, but it really, you really noticed it when the market went red again around 3:30 as this market could just not hold any gains. Volume today was tremendous. Second biggest volume day of the year, and I'm going to show you quickly here on the SPY. You did 502 million shares on the S&P SPY, which is the spiders, and the last time we did that type of volume, and look at this, even bigger than the other day, Look at that size on that volume candle here. Absolutely huge. And that's another thing you want to see. You got to see huge volume kind of flushing everyone out. And again, the last time we had that volume in this size volume, it's the second biggest day since this day right here, which happened to be the bottom in the market in January. On this day, you had 510 million shares traded. So 502 million today to 510 million back in January. So again, looking at the parities here, you want to kind of realize that, and at the same time, you have to be so cautious because this market is an unbelievable, mess right now between the financials. And again, we had a big pullback in oil. In fact, the USO had one of the biggest drops intraday that I've ever seen in any commodity, let alone that. And I want to show you guys that. Look at this drop on the USO. That's the daily chart, but look at this drop. When it really got to this point, all right, you had a little bit of support coming right in here, right around 116 on the USO, which is the oil fund. And once this broke, look at that drop all the way down to 110 from 116. That's huge. That's unparalleled. And then you got the bounce back effect, and you got a little bit of a sideways. Notice the pattern here forming. Essentially, you're looking at somewhat of a bear flag pattern here. And again, we'll have to watch this very closely because every time we see a big drop in oil, you wonder if enough damage has been done to the longs that they're just going to start to dump. Obviously, big players dumped here, all right? This was the largest volume day, one of the largest volume days on the USO I've seen ever as well. If it has, it might have been the biggest day ever, although it does look like it rivaled this day here, actually a little smaller than the big that day, but nonetheless, huge volume in that regard. Also, notice on the daily, you're looking at the daily chart now of the USO. Notice you came down, you pierced the 20 moving average, but they were able to save it and close it on the 20 moving average on or above. Now that's support. All right, so you're really sitting at the 112 support line on the USO, and you want to see, do we get follow through? Also, note this general trend line that we're touching. All right, this is a major trend line going all the way back to April. All right, 1 hit, 2 hit, 3 hits, 4 hits now of this trend line, and you bounce back up. All right, next time down, I happen to believe we break lower, and the next stop will be the 50 moving average right here. All right, on the USO. Should we take that out, and then it's all, then we discuss something totally different. But that's right around 107. So again, we got to watch the USO now because it's the oil issue. Oil was down over $6 today. It was down over 8 at the low. And again, this is going to be a key to the market because not only do we have the financials that need a bounce, but also oil coming in would be huge for the market. And those three catalysts, you have the oil, financials, and the US dollar being the key catalysts in this market. You need them to go in the correct direction, and this market will rip. All right, again, as I mentioned, a huge amount of shorts, more than probably, from what I've heard, the biggest short position we've had almost ever in this market is currently in this market right now, and that has to be monitored and realized. Now, it doesn't mean that the market's going to go up by any stretch, so don't be fooled by that. There's a lot of problems in this market. I'm going to go back to the SPY chart because I really want to focus in on this chart. Now, this is the daily SPY chart. Now, remember, our turn date was right here. All right, right in here. And once we got that move below and a close below, we wanted to watch for confirmation. That did happen today. So now at this point, the only way that personally I'm looking for a move back above our key level right here. Once we get back above that level, then you start to look for a bullish move again. But this will be a key resistance level right here, and we'll go into that once we get back towards that line. One thing I do want to point out, notice where the high of this market was. And this is one of those technical, unique things that is just fascinating. All right, so you had the market selling off hard and then rebounding, and look at the high. Where did it come right up to? The same line as our breakdown line. So again, note that line and how significant that is in that area. And you want to keep track of that line. And again, as we get closer into moving back above that line, we'll keep touch with you guys and mention the exact level on that line. I can give you an approximate here, but it's just an approximate, around 123.50, give or take. All right, right now the SPY trading around 121. So right around 123 to 123.50, that's when we start to get very interested again at a possible move up in this market. Now, one thing about this market also is it has to come back to the 20 moving average. One thing here, as you guys know, ever since we've been doing these videos, we talk about how a market has to go back home, and the home is 20 moving average. All right, so at certain points, it always has to come back. The market never strays that far before it touches the 20 moving average again. And it's at this point, you're basically talking about from this point on being above the 20 moving average. As you can see, the yellow line being the 20. At some point, you'll have to have a move back up in that level, and it could come at any day. When you have short interest as high as it is, when you have as much bearish sentiment out on the street as it is, when you have the financials getting pummeled, and let's look at the XLF again. The XLF, same thing. Another drop of 50 cents, although it was positive for a good chunk of the day today. And I'll show you the intraday XLF. You had a hard sell early, and then you went positive for a majority of the day, and then you sold off into the close with the market. So keep watch of these financials. Should they get a bid, should also the oil continue to fall or at least stay pat and continue to slowly sink, and the dollar is able to get a bid, then you're looking at a major rally. Until that happens, the key level on the SPY remains. You have to get above this. Now, one thing about today, and until what you're going to look for here, guys, and I'm going to set you guys up right here, a late day rally, eventually you're going to look for one to hold. That's the signal to be starting to look at the market very interesting. Until you get that late day rally to hold, meaning until we rally from lows and hold the highs, or close to the highs, meaning the market closed positive, then you don't really want to pay attention to this market on the long side. All right, and once you get that positive close, you look for confirmation the following day, which should be around this level right here marked in, and then that's the signal to start to get very, very interested in this market. Until then, it's a chop shop, and you'll probably get killed. Take care, guys. We'll talk to you tomorrow.